Good afternoon, everybody, for joining this to the post Q3 financial performance and on the con call today. Myself, Swarup Kumar Saha, MD CEO of the bank, along with me are my two colleagues, Dr. Ramjas Yadav and Mr. Ravi Mehra, and my CFO, Madam Mahima Agarwal. So we have declared our results. The board had approved the results yesterday, and the results have been posted in the websites and the stock exchanges. I'll just give a brief on the highlights of our Q3 performance of this year, and then we'll open up the forum for the question and answers. So, in spite of the challenges of the ecosystem of the migration of the CASA deposits to the retail term deposits and the overall global and domestic scenario, the bank has shown some significant improvements in the Q3 of the financial year 23-24 compared to that of the Q2 of the same year. And some of the salient features where the bank has shown improvement is in the CASA ratio. The CASA ratio sequentially has improved by 158 bips to 32.77%. The NIM of the bank has improved sequentially by 21 bips to 2.54%. The net interest income has improved sequentially by 9.48% to 739 crores. The non-interest income has grown by 35.07%. The gross NPA has improved to 5.70%, improvement by 53 bips. Operating profit also has sequentially improved to 277 crores. The yield on advances has improved quite substantially to 8.91%, and which is that is showing a sequential improvement of 29 bips, and this is one of the better yields that compared to all the other banks that have shown so far. I'm talking of the public sector banks. In terms of the overall business growth on the YOY basis, the total business, the bank has been able to cross the milestone figure of 2 lakh crore in Q3, showing a total business growth of 7.84%. The deposits grew at 8.09%. The retail term deposits, that is also a good factor that is impacting positively in our bank's overall performance, is the retail term deposits is also showing a healthy growth and is nearly 9% in terms of the YOY basis. The savings deposits has grown by over 6%. The current account deposits have grown by 9%. The CASA on the overall YOY basis also has grown 6.38%. Again, the growth of 6.38% is better than many of our peer banks. The CASA ratio, of course, YOY has declined by 33 bips, but our decline, if you compare the results of our peer group and some of the other public sector banks, our YOY dip in the CASA ratio is comparatively less than the other banks, and we are making all efforts to improve our CASA portfolio. In terms of the advances, yes, advances growth has been muted at 7.48% due to bank's strategic decision to enhance our ability to rapidly changing market conditions, which is of the high interest rate scenario on the retail term deposits and the rate war that is going in the corporate advance segment. We have concentrated this quarter on focusing on RAM growth, and that is why our retail growth has shown moderately healthy growth of 15.5%. Agri has grown by 6.12%, which in September was only 2.32%. MSME also has grown at 12.84%. In September, it was 7.60% only. The RAM percentage has improved from 49.47% to 51.46% on a YOY basis. The corporate book, which had grown at 12.81% last quarter, has now grown at 3.25%, mainly due to the reasons that I just conveyed before this data point. The core fee income has increased by 35.29%. The yield on investment is also at a healthy level of 6.84%, and this yield on investment is better than most of the public sector banks. The provisional coverage ratio stands at 88.16%. It has a slight dip, and we'd like to scale it further towards 89%. In terms of asset quality, our fresh slippages have been contained at 228 crores, the lowest in the last 4 quarters, and compared to the 340 crores in the previous quarter. So the slippage ratio has been contained at a a reasonable level of 0.30, and over a 9-month period, it is 1%, which is aligned with our overall guidance of below 1.25% for the entire year. Our SMA-2 book, above 5 crore, again, also has shown improvement and has been reduced to 201 crore from 407 crore last quarter. The net profit has declined to 114 crore from 189 crore last quarter, primarily due to the additional provision of 150 crores towards wage revision and the overall impact on the interest rate on the deposit side. But the one point I would like to mention here is that if we see our sequential cost of deposit has slightly increased by 3 bips, but compared to that, our yield on advances has increased much more substantially on a sequential basis. So we were able to improve our NII on a sequential basis much better than what we were doing in the previous quarters, and that will like to continue in the future as well. The capital adequacy has been reduced to 6.13. This is primarily due to the impact of 81 bips on the RBI circular on increasing the risk weight assets on NBFCs. Otherwise, we are still at a healthy position of 16.13. So that was all from my side in terms of my opening remarks. I now welcome all the questions that can be asked to us, which we can answer. Thank you.
Thank you, sir. We will now begin the question and answer session. Ladies and gentlemen, we will wait for a moment while the question queue assembles. I request the participants to limit their questions to 2 per person, and please rejoin the queue for any additional questions. Anyone who wishes to ask a question may raise their hand by clicking on the raised hand icon on your WebEx panel. For those who have joined us via audio call and wish to ask a question, please press *3#. If anyone is having connectivity or audio issues, you may share your questions on WhatsApp to us at 790-743-1859. I repeat, if anyone is having connectivity or audio issues, you may share your questions on WhatsApp to us at 790-743-1859. Before asking the question, I request you to please introduce yourself and your organization. So we will wait for a moment for the questions to assemble. Our first question is from Mr. Marshall. Sir, please go ahead with your question.
This jumper recovery from our bad debts written off. What kind of recovery do you see?
Speak a bit louder. Thank you.
Yeah. During the current quarter, for example, this quarter, March ended 2024, how much of the recovery you foresee from our NCLT or other bad debts written off cases?
We expect around 350 to 400 crores to be recovered.
350 to 400 crore, right?
Yes.
Okay. And the second thing that how do you see our demand picking up in terms of our advances?
We are let me put the background on this to answer. It will help everybody to understand. We know that we are in a very, very dynamic ecosystem, and therefore the credit growth is a part of that. As a bank which has its constraints on the low interest bearing liability side, So we are very careful in improving our or augmenting our credit growth. So overall, we are trying to rebalance our portfolio in such a way that we are more focused on the bottom line, and we protect our NIMs and other profitability ratios. So on this quarter, we look into credit growth for this quarter at least around 6 to 8% range.
Very good. And in terms of NIM, like what kind of growth you are like looking forward for the
NIM
NIM?
will, as of now, the 9 months NIM is at 2.50, so we like to have it around 2.50 to 2.55.
Okay. My last question regarding this, like all other PSU banks have floated QIP. So what are your plan in terms of capital raising and the QIP?
Yeah, so we had also in our bank also planned to raise amount of 250 crores last year, but we feel that the time was not correct for us. So now that we have now declared our results, so we will go back to our capital planning committee very shortly, and we will announce as soon as we decide on the quantum and the timing on which at what point of time we will. But we have our plans on the capital raising issues also. But as of now, our capital adequacy at 16.13 is still very healthy and comfortable. So we will wait for the opportune time, but we will announce it as soon as we decide on the quantum.
So do you have the enabling resolution in place, or you have to float the new resolution?
No, those things we will be floating afresh.
Okay, okay, sir. Thank you, sir. Thank you, sir. Thank you. All the best.
Thank you.
Thank you, sir. We have our next question from Ms. Neha Shah, an individual investor. Sir, there are two questions. One, can you throw some light on what has led to NIM contraction of 8.20% YOY? Do you see any pressure on NIMs in the coming quarters? Second question, the total business and advances for the quarter has increased by around 7.5%. Whether this growth rate will be sustainable?
Yeah, thank you for the question. The NIM, yes, it has gone YOY, but the basic reason, as I told in my opening remarks, because of the interest rate movement on the retail term deposit side and the migration of funds from the CASA to the retail term deposits. And also the market dynamics of credit is also showing that there is a price war being in the market regarding what should be the optimum level for the pricing on the asset side. So as a bank, we thought it was not prudent for us to go aggressively on the advanced top line and protect our bottom line. Therefore, that the contraction of some of my income is due to that also, that we have not aggressively moving towards low yielding assets. So therefore, we had rebalanced our portfolio. We are rebalancing it, but the green shoots are like this. If you see our sequential performance, you will find that there is a improvement in our NIM also, and we like to maintain it, as I said in my just a few moments earlier, that we'll maintain it at between 2.50 to 2.55. As far as the business growth of 7%, 7.84%, I think it is sustainable, and we'd like to continue with it between 8 to 10%.
Thank you, sir. Our next question is from Mr. Saket Kapoor. Sir, may I request you to please introduce your organization?
Thank you for this opportunity. Sir, firstly for this quarter, I think so the interest expenses, there is a significant increase in the interest expenses. So if you could just give us some color on the repricing of our liability franchise for the quarter, and going ahead, how much more of it is left to be done, and also for the our advances, what's the target, what have been our current yield on advances, and what are we contemplating for Q4 going ahead? And also, sir, on the free float part, what is the message from the government in terms of our maintaining the norms for the free float? I think so the float is only around 2%.
Yeah.
So these are my few questions, sir.
Yeah. Thank you for your questions. As far as the interest expenses are concerned, yes, there are two components to the interest expenses. One is on the deposit side, and one is on the other side, that is particularly on the borrowing side. So we have been trying to augment our credit on a mix of liabilities and a mix of borrowings. So as the pricing escalation happened in the market, the migration of some of our low cost CASA also has moved to the retail term deposits. But the good part is that, as I said very in my opening remarks, if you see our cost of deposit and if you compare it with the yield on advances, you'll find that incrementally my cost of deposit has only moved by only 3 bips, 3 bips, and while my yield on advances has moved by 29 bips. So that's the messaging that we like to do, that we'll continue to grow qualitatively, keeping focus particularly on our bottom line. And so the first part of your question regarding our expenses. So to answer that, the component was balanced between interest rate on term deposits and interest rate on borrowing. So that is the overall composition. So our deposits have migrated, so as I said. So, but we have been able to contain it, much like the other banks. If you observe the position of other banks, the sequential increase in the cost of deposit has been much higher than us. And in fact, our sequential increase in our yield on advances has also been higher than the other banks. So if on a comparative study, at least for this quarter, we find that we have been able to manage our yields and our NII in a better way. And that's how our NII also came on a positive territory from the sequential basis. Regarding the messaging of the government side, of course, there is no as a message. We will announce it if there is any. As of now, we don't have anything to share on that part. Did I answer all your questions?
Thank you, sir. We will move on to the next question from Mr. Nitin Gandhi. He has two questions. One, what is the rationale for the increase in unrated instrument 7.2 to 10.1, and what is the yield? Second, if you could share your thought process for the cost income ratio, as it is high at 75. Thank you.
Yeah. As far as the cost to income ratio is concerned, this has been high because of the one exceptional item of 150 crores that triggered this increase in the cost to income ratio. If we take out this exception item, then our cost to income ratio comes around 65 point some 20. So that is the exceptional item that triggered this increase in the cost to income ratio for this quarter. And for the other question regarding the unrated accounts, I think that was the question, no? That regarding what is the rationale of unrated accounts? Yeah. See, overall, if you find that happens on a dynamics of our daily loan book, and I think overall, if you find that in the triple B and above, that has increased. So the total rating and triple B above has increased, and the double B and below has also has declined. So our quality loan book is maintained. And as far as the unrated accounts, these are normal fluctuations that happen in any circumstances. If further details are required, we'll be happy to share with you.
Thank you, sir. We have a next question from an audio person. Sir, may I request you to please introduce your name and your organization?
Hello.
Hello. Yes.
Can you hear me?
Yes, please.
I did not an unnamed person. I am Ashok Ajmera. I am the chairman of Achcon Global. There was some
How are you,
problem in the, I think, in that link which is given. So I could get on to only after 15-20 minutes through this audio call. Sir, our profit has got really impacted in this quarter after doing well up to the last quarter. And our employee cost has gone up by 110, 114 crore. That is because of mainly the rate in the increase in the rate of wage, this thing. So can you give the calculation for that? That is that from 15 to 17% when it is now finalized, how much provision we were making in earlier two quarters we have made, and what is the impact in this quarter of all these 3 quarters together, sir?
See, we were making at 12%, so additional we made 150 crores for this quarter.
You added, and from the next quarter again, it will be streamlined. It will be only
because this is we completely have taken care of our wage revision impact.
All right, sir. Second, sir, my question is last time also I had asked on the provision for tax. So we continued in the old regime, and I think our DTA assets balance is 1,658 crore as per the note. So now, say from 106 crore in the last quarter, we have come down to 66 crore, maybe because of the less profit. But can you elaborate on the total tax calculation? Because ultimately the bottom line, whether the tax is payable or not, actual in cash, it affects the bottom line, the net profit.
Yeah,
so
my CFO will
going
answer.
forward for the whole of...
Yeah, please carry on. Mr. Ajmera, please carry on. Please carry on.
Going forward for the whole of 2024, what will be the situation on this tax front, sir?
Yes, sir. Actually, whatever brought forward losses we have consumed in this quarter, sir. So both MAT and in the normal tax, we were having tax. So from the next quarter, we will be having tax in the normal, and the MAT credit will be down, sir. And we have DT assets also, and MAT credit will be down. But we are following, at present, we are following the old tax regime only, not the new tax regime.
Yeah, you are following the old tax regime.
Yeah.
Okay, sir. I just observed in note number, I think 12, that our SR total has been increased to 96.63 crore. And though it is 100% provided for, but the rating withdrawn one SR of 73.67 crore. So which is the new SR added? That amount is not given. And whether this is NARCL or this is any other ARC?
So it was the serial resolution happens, and due to that we have received SR. It is that only, sir.
No, from whom we? I mean, is it from the any other normal ARC?
NARCL.
NARCL, sir.
NARCL or other ARC?
NARCL.
NARCL.
So it means it is government guaranteed SR, isn't it?
No, this is not government guaranteed. This resolution didn't happen under government guarantee.
Okay, okay. That is why we provided for 100%
This is an
on this.
exception.
Yes,
This resolution was an exception because NARCL bidded as an ARC. It was not through the NCLT resolution. So there is a technicality in this. So this SR of NARCL for SREI resolution is not government-backed guarantee.
Right, sir. Again, now, sir, on the credit growth and the resultant income, what are your views now going forward? Are we? I mean, like we have been talking about it for a long time. So what is your basically you're thinking about looking beyond the normal, the standard planning for the increase in the credit? Can we think a little beyond that, and can you give some color on the expected credit growth in the next quarter?
Yeah, I think you joined a bit late. As far as the guidance is concerned, I gave an overall guidance of this quarter around 6 to 8%. But to answer your question in totality, in terms of the future planning of the bank, we are a bank which will continue to focus on our revenue generating assets, which will give me more returns. As a bank, we know that in the market, the credit growth that is happening happening at a very steep rate decline. Means, and there's a lot of price war that is going on. And for a bank of my size and my liability resources, it is not prudent for the bank to aggressively lend at a rate which is much lower than the rate of the cost of deposit that we are gathering every day. The markets are lending at rates at much below the cost of deposit that we are mobilizing at this point of time. So that is not remunerative at all. So, and I don't have that legacy strength on my books on my retail term deposit, on my CASA, which can augment that aggressive credit growth which is happening in the industry. Therefore, we have to play along with our legacy and our business models. Our business model as a small and beautiful bank will be a bit different compared to the other banks. Going forward, what we will be doing in terms of the segmental credit growth, as you all know, that we have upgraded our Finacle. That was a big achievement in this quarter. We are now very upbeat on how we can leverage this upgraded technological platform. We have upgraded to the Finacle 10 version, which will enable us to provide services at par with any other banks on the credit side, whether it is on the API linked, using API linked credit underwriting engines, whether it is pre-approved personal loans, whether it is pre-approved housing or vehicle loans, KCCs, agriculture, mudras. So all these sort of avenues are now going to increase for the bank. We have now any migration of such a big nature requires 2-3 months of handholding in terms of stability. I'm happy to share with you that the Finacle 10 has been stabilized to a large extent, and now we are having a base platform where we can collaborate with fintechs, collaborate with other agencies, NBFCs, where we can do lots of digital lending within the RBI guidelines. So that is what we are looking for, and we will create our own niche segments in the country. Our segmental, our geographical spread is still north based, so we need to expand to the other areas of the country. We are expanding to the other areas, but as we upgrade our technology and we upgrade our digital services, value-added services, we will be able to do more and more, much more technology-driven services, which will help the bank to grow its balance sheet. We are doing co-lending in a big way. We look into assignment of pools also in the coming future, because now we are trying to integrate the API, so we'll have that possibility of having assignment of pools that other banks are also doing. But we'll also focus on some of our key products like GST lending products, personal loans. We have excellent personal loan product. We have a excellent gold loan product, which is having a lot of traction. If you can see, my presentation has shown that the gold loan is increasing at around 35%. The personal loans are also increasing handsomely. So we will continue to focus this, and we are tweaking our products to suit the current environment. In the agriculture sector also, we will have concentrated on warehouse receipt financing, on farm mechanization, food processing organizations. So overall, we are now focusing on these segments. So our RAM percentage has gone up now 51%. We'd like to take it up between 53 to 54% by the end of this March, and scale it up to around 60% in the next financial year. So that would be the overall macro dynamics of our bank's credit growth.
Thank you, sir. There is a slight clarification from Nitin Gandhi from Inquest Advisors. As an exceptional item of 150 CR, will it continue to Q4 and the next year? Thank you.
No, that would be not to that extent because we are fully provided for the wage increase. So that will stabilize in the coming quarters. It will not be to the level which was in Q3.
Thank you, sir. Our next question is from Mr. Sakib Kapoor. Sir, request you to please go ahead with your question.
Sir, pardon me, have you mentioned about what is our CD ratio currently for this quarter?
Yeah, 70 point, I think it's in the presentation, it's 70.60.
And what are the likely target for going ahead?
Will be, you must be reading in the newspapers on the CD ratio component and how the RBI is cautioning the banks overall on a macro basis.
Right.
So we will not go overboard in our endeavor to increase our CD ratio. We will do whatever bank's business is profitable. The bottom line would be it's profitable business that the bank will continue to happen. To that extent, whatever CD ratio is to be maintained will continue to maintain. But I foresee by the March quarter, we'll be around 71 to 72.
Sir, and for the treasury part, I think so there was a very strong reaction from the bond market today also.
Yes.
Post the vote on account by our Honorable Finance Minister.
Correct.
So, sir, how will this change the dynamic going ahead if we see the bond yield trending in a band lower to 7%, something in the vicinity of 6.5 to 7? What will change for banking space? I think so there will be one-time gain on your treasury book going ahead from MTM. Other than that, how will it change the landscape for you in terms of NIMs and other things, sir?
It will have thanks. At least I'm very happy you have asked this question on a very appropriate day today. Yes, the MTM it plays a big factor in our overall balance sheet management of any bank per se. So with the yields movement, downward yield movement of as we have seen today, and the expectation that we have over a potential Fed cut of 75 bips and a potential repo cut going forward, we feel that it will have a very good impact on our overall operating profits. It will have a very good impact on our overall impact on our cost to income ratio. And that will also change the dynamics of every bank's balance sheet. And for our bank of our size, we also are we are providing on a depreciation basis every quarter over the last apart from Q3 if you leave aside Q3, if you take from March quarter, we were providing on the MTM due to the yield movements. Q3 there was some correction, so we got some benefit out of it, but we look forward to some handsome benefits that we get over the Q4 and the going forward if everything goes okay as the predictions are. So we expect the dynamics of the balance sheet will change quite dramatically if whatever you are saying at 6.5 to 7, if that happens, and if there is a possibility, yes, that can happen. But when it will happen, the timing of it is which still needs to be looked into. So, but the ecosystem, the dynamics of are all now moving to the positive direction of further rate cut. In fact, without a rate cut, the yields have moved today by 8 bips, I think. So that shows that we have lot of things in store in the coming future, and with the as the things play on, we will be very positively impacted by this development.
But sir, will it affect the NIMs also going ahead, or the cost of fund will also go down and things will get realigned? That is what you are trying to say.
Yes, it will get realigned, but you see, the dynamics will be such that, of course, what happens is with a rate cut, I don't know what will be the timing, whether it is some say June, some say September. I personally feel it should be around Q1 or Q2. But as soon as a rate cut happens, and I'm talking of domestically, the impact on our EBLR rate linked loans will be immediate. We have 46% of our portfolio linked with the EBLR. So that will be there. Well, how much will be impacted in the next financial year? That depends on the timing of the rate cut. But because that has to be transmitted on a T+1 basis, so immediately we transmit that. So that will be an impact on that. But overall, the futuristic things will also play its role with a positive yield movement. It will balance out in some way, and we will be able to maybe book more income on the interest side also if you play our cards well. If you see our yield on investments at this point of time is at 6.84, which is pretty good compared to the market other banks, particularly the public sector banks. So we hope that this is going to play out positively for us.
Thank you, sir. Our next question is from Mr. Marshall. Sir, please go ahead with the question. Mr. Marshall, are you there?
Okay, done. Yeah. So my first question is regarding this provision. In provision, if you see the numbers, let me open the file. Okay. It is saying 96 million, like 96 crore rupees, provision. This is in spite of NPA reversal 320 million, so 320 crores. It means in actual parlance, we have provided for 416 crore. So can you please define that? What are those particular items?
It is primarily the SREI resolution that has happened, the conversion of the debt to equity. We are holding the 100% provision, what we are holding in SREI. So that has moved from NPA to NPI.
No, that is okay. That is 320 crore. But what I'm asking,
that is the return, that is the provisional write back on the NPA that got reduced. And so the NPA got reduced by conversion of that one term to certain equity instruments and SRs. So that provision, there was 100% provided for. So the 100% provision continues to be remain in our books in the treasury now. That is the difference.
My question is different. My question is that means in our actual terms, our provision was 416 crores. 416 crore minus 320 crore, net is 96 crore. So I am asking, what is the breakup of 416 crore, which is too high?
Wait, the same thing will tell you. She will tell you.
Actually, your question is NPA, we got reversal. That is okay for 314 crore. But in the treasury, we have to make provisions, sir. So it is a treasury provision which is hitting, sir. Because in investment, if it is NPA, then we have to make 100% provision in that. So it is a provision in investment. That is 460 crores, and NPA, you are right, it is reversal.
Okay, so you are saying it's almost nullifying.
Yes.
Yes.
The bottom line has not been impacted by that.
So Miss, what has been the story of SREI finally? Actually, we haven't followed it. So it has been resolved now, or what is the case now?
It has been resolved now. It has been resolved.
So now who has purchased, and did we get shares or what now? What happened to this one?
NRCR has purchased it.
Okay. So we have got some shares.
Yeah, we got some shares. No. Yeah, not shares particularly. We got the upfront some cash. We got some SRs. We got some OCDs. We got some NCDs.
Okay. Fine. So this 96 crore has come because of the SREI, right?
Yes.
So this will not be repeated in the next quarter.
No, it's gone. Yeah.
Because you mentioned that because in the previous quarter we had got 35 million minus. Yeah. 35 crore, sorry, I'm speaking millions. Yeah. So previous quarter we had 35 crore minus, this quarter we have 96 crore plus in provision. So you are saying that that in March quarter it will not be that high amount, or it will be minus only, right?
Yes. This was a big resolution, so the impact was like that. But in the next quarter, this particular exception will not be there.
Okay. My second question is that regarding treasury income. treasury income has almost halved by 50%, like, by 65 crore down. So what is the reason, and like what action you are taking to fix it so that like this kind of surprise doesn't occur in the subsequent quarters?
It was not a surprise per se because we had some redemption of securities in this quarter. So that had an impact. But overall, now the things will pan out with the movement of the yields. We are Treasury. In fact, if you see our books 1 year ahead, Treasury has contributed very handsomely. Being a small book that we have, we are hit by the dynamics of the market, of course. But now that everything is moving towards a positive environment for Treasury business, we think that Treasury will now come back how the way it had contributed in 21-22 also and 22-23 also. So that Treasury moves in a cyclical order. So therefore, it has its own dynamics. So now we are in a positive environment, and from Q4 onwards, you will find that change happening.
One thing also I want to add here, some accounts are being upgraded in the formal investment, so we have to provide in that MTM also. So now a standard we have to provide MTM. That is also a main reason for this.
Yeah. So yeah, sorry, I forgot to tell that. If you see per se the standalone basis on Treasury functioning, it doesn't reflect in the overall performance that is depicted in the presentation. The amount, one of the major component of the negativity is due to the upgradation of a NPA account to standard account, which had a equity component. So the equity component now, the provision has moved from the below the line to above the line.
Standard.
So that it impacts our operating profits to that level.
Thank you, sir and ma'am. Our last question is from Mr. Choksi from Indus Equity. Sir, request you to please go ahead with your question.
Punjab Sind Bank. Sir, you highlighted you implemented Finacle. Technology will work. What are we doing about human resource, which is the bigger enabler to operate technology and connect with the customer?
Yeah. Yeah, a very important point. Today, if any organization has two important things to address, two axes of development in terms of today's environment is, of course, one is technology and the second is HR. So one component, at least we are taking step by step. One component is, of course, the technology side. Now, of course, I forgot to mention in my submission so far is that we have also upgraded the treasury solution recently. Okay, so again, the core banking to answer the question of the previous person who just talked on treasury. I think Mr. Saket was talking on that. We have also upgraded our treasury solution to the latest version, so that will also give a fillip to my overall treasury functioning. But coming back to Mr. Choksi's question regarding on the HR side, so last year we were concentrating on the technology side. Now we will be taking on our internal processes for HR transformation, where the inbuilt capacity will be determined. We have already started through a very reputed institution the process of succession planning and competency mapping. So that process has started in January. So we will be able to get some insight on our future plan. We are taking a lot of pain in terms of training our people, particularly on project finances, infrastructure finances. So we are tied up with various reputed institutes, training institutes, which are giving trainings to our people on specialized advanced level of credit. And in general, in terms of overall managing optimally the productivity of our people, employees, we will be bringing out the HR transformations exercise, which will have the performance management tools, the training requirements, the transfers, postings, everything will be taken on a latest version of what is happening in the industry. In fact, we are also sending people, our top executives, to the FSIB training curriculum that we have for all the FSIB has for all the banks. Last year we had 6 people, 6 of our top executives who have joined the FSIB training. This year again, we will be having at least 4 of our top executives who will be attending this training, which will be the best in class in training across, and they will also understand the dynamics of where they stand compared to the other peer people. So we are giving a lot of focus on this, and this year, particularly not this year, this Q4 and the next year, FY24-24, our main area would be as we leverage our technology that we have upgraded for our business purpose, we'll be now going on a transformation exercise on the HR side. So that will play its role in the coming period of time.
So what is the capex on technology, including this Finacle upgrade?
The capex of you want to answer that? Yeah.
The total cost of Finacle 10 was around 120. Out of this 90 was 190. So out of that 120 was the capital and rest was the revenue. So almost we have also capitalized in this quarter also around 90 crores we have capitalized.
So I have a question. What is your undisbursed loans which you've sanctioned in last 30 days, 45 days, or whatever?
Rajesh, in my GM corporate, Mr. Rajesh is there.
Sir, it's around 500 crores, sir. Yet to be disbursed.
Undisbursed is only 500 crores.
Yes, sir.
Your all loans are available 100%, you mean?
Sir, all the loans are disbursed, sir, except infrastructure loans, sir. Disbursement is pending.
And unutilized working capital limits?
That I think we have to find out that data. We'll provide you separately that data.
No problem, sir. Second thing, sir, you highlighted that you have taken a lot of ambitious programs since you, Dr. Saab, and now Ravi Mehra are part of the team. You might have done the technology. Now you are enabling the HR process. Do you think in 2024 your new recruitment for various programs in retail or wholesale banking or treasury, new software, all this transformation will be achieved in 2024 December, or will it spill over to next year?
There are many aspects to this. So nothing can be, it is all segregated. The milestones are all segregated. If you terms of products and giving value-added services, leveraging technology, that we foresee by September. Yes, by September we will be able to be on the ground with those value-added products. In terms of the HR, we will be not only, as I said, training and doing training programs for the top leadership. We'll also be now focused on some from lateral movement of at the key positions. In fact, we are taking laterally on the CXO position. We are already completed the process of CCO, the CFO, the CTO. So we are having 4 CXO positions on a different on outside contract basis. So once these and they are going to come in, the CRO is already there. The other 3 CXO positions will be occupied maybe by April, because they all have to come from various organizations and they have given their resignations to that. It takes 2-3 months time for them to come on board. So once we have the CXO positions with us, we'll also do wherever we find there are gaps in the competency, where in the specialized verticals, we'll not only promote our internal staff members and have trainings to occupy those positions based on the succession plan exercise being done by a reputed institute. We'll also like to have lateral movement of people within the bank, which will also give a good balance of experience and efficiency. So these things will translate in the entire next year, 24-25. It may this entire period will be utilized for HR issues only primarily.
Sir, my next question is, based on today's interim budget, I don't know whether you had chance to view it or not or hear the pointers, but the bond market would have given you a clear indicator where we are headed. Now, based on yesterday's FOMC statement and today's budget, the yield is definitely showing that public sector banks are here to enjoy some benefit in the current quarter and maybe in 24. How are you positioned to reap that harvest? Because our CD ratio or NIMs are concerned, our CASA needs a lot of improvement. So maybe today you have surplus treasury, which may have a big benefit if your credit growth is likely to happen.
Yeah, these are, I have answered this in some way in a previous question. Yes, we are looking forward to that period where we will be able to leverage on this movement of the yields, and it will the overall there'll be a positive, much positive impact on our profitability, and depending on the how it moves, means some will be booked in Q4, maybe some will be done next year. In fact, there is another important RBI circular in between, which has revised the valuations and the operations of Treasury Department from the effect from 1st April. So those things will also be kept in line when we do our Treasury functioning from the next quarter onwards. So all in all, on a macro level, yes, the bank should be able to leverage on these.
If I intervene and ask you a question, with your experience in treasury, which I'm aware of from previous banks, do you see in the current quarter the bond market will pierce 7 or it will range between 7 and 7.10?
I'm only a treasury man. I'm not a fortune teller. But I'm
asking from your experience. No, sir, I'm not saying about a fortune teller. You can go wrong, you can be right, both will.
Yes. Yeah, you have to give me that benefit. Yeah, but overall, I feel that as the environment is moving towards a positive, with the Fed also that yesterday or day before yesterday indicating certain good indicators on their fiscal positions, etc. And today also the government announced the interim budget with talks of fiscal consolidation. I think the overall environment is taking it at least to the 7 level, if not below 7. That I can positively say, but only one factor that will come in between is our next MPC that is going to happen next month. If the RBI plays its cards in a cautionary manner to have more data, maybe the rate cuts will happen somewhere in Q1 or Q2 next year. But in the current context of where we are, to answer your question specifically as far as Q4 is concerned, I think we are at around 7.04 to 5 as I saw the last movement. It shall touch 7, or it may fractionally go below 7 also if everything goes okay.
Sir, my next question is, as your technology and human resource are coming in a positive way, means technology is already an enabler, human resource, you spend money. It's a matter of time between new recruitment and the current resources what you have. Every banker in town, whether it be public sector or private sector, is talking about co-lending, co-branded businesses, DA, not DA, but mainly co-lending. Specifically looking at your area of business and where connectivity is in northern India, how are we capitalizing on those initiatives? Because you are ready for a lot of things. Is that part also being worked on, or that is?
Yeah. We are very upbeat on co-lending. Let me very candid on this. Okay, and our portfolio is around 1,600, 1,800. We have already increased our book to 1,800 crores in co-lending only. Okay, and we have multiple partners. We have more than 10 partners today in terms of co-lending, and we continue to explore that opportunity both on the priority side and on the non-priority side. We had the earlier year, last year, on priority co-lending. This year we have taken all the required approvals of the board, etc., to do non-priority co-lending. So now that will get a fillip in terms of our co-lending business. So that's very much in the agenda, and we are aggressively pursuing that. The direct assignment route we are exploring because our technological preparedness it has to go a bit further ahead. We are getting prepared, but a bit more further ahead. So we will take some cautionary view before we actually go full hog on taking the assignment route also. But co-lending, yes, very much we are on the cards.
Thank you, sirs. As there are no further questions from the participants, we now conclude this conference. Should you have any further queries, please reach out to Ms. Mamta Samant at 9930625104 or mamta.samant1@dentsu.com. Details are mentioned in WebEx chat and the analyst invitation sent to you earlier. On behalf of Punjab and Sind Bank, I thank each one of you for joining the conference call today. You may now disconnect your lines. Thank you.
Thank you very much. Thank you, Shilpa, and thank you all for joining this conference.
Thank you, sir.